capital growth or cash flow? That's the question you got to decide on as an investor. Do you want capital growth, that's your value of your property going up over time, or do you want cash flow, which is the amount of money you get in your bank at the end of the month, which is the reality bit that you live on? Now, I'm stood in London where the capital growth over the last decade has been a whopping 60% compared to the national average, which has been 35%. But on the downside of that, that means that the rents are relatively low. So if you're doing a strategy like buy to let, you can look at a 3% yield, which means you've got quite a low cash flow compared to the national average, which is 6.74%. Or maybe there's another solution, you look for both. So you go to an area that hasn't seen all of its growth yet. So an up and coming area like Manchester, although arguably it's seen quite a bit of growth recently, Leeds, Birmingham, areas where you're getting a substantial amount of investment and you can expect some capital growth, but your yields are going to be higher. It's worth looking around on the map and deciding when you're doing your due diligence which area's got a strong yield if you want that cash flow, but also trying to determine, am I going to see some capital growth in this area? What's happening? What's the 5-year, 10-year plan?